Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the crucial level for both the indices. We'll also be discussing on the key sectors in focus in trade today, as well as the next few trading sessions. But first up, let's come to the update in the global markets in trade yesterday. So in trade yesterday, all the three major indices in the US market witnessed a positive rally, fueled by stronger than expected retail sales growth in July, which helped ease concerns about the economic outlook. So we had the tech-heavy Nasdaq, which surged by 2.3%. The S&P 500 climbed 1.6%, and the Dow closed 1.4% respectively. Currently, all the three US indices are trading above their short-term and long-term moving averages. Looking ahead, the S&P 500 is poised to continue its upward momentum, potentially testing the levels of 5,610 followed by 5,660 in the next few trading sessions. Coming to the update regarding Brent oil, so Brent oil ended at 80.27 level on Thursday with a gain of 1.08%. Going ahead, the zone of 77.80 will act as the immediate support for Brent oil. Coming to the update regarding the US dollar index, so it has marked a low of 102.27 and thereafter witnessed a minor pullback on Thursday. However, the major trend of DXY remains on the bearish side. Any sustainable move below the levels of 102.2 will lead to further selling pressure in the index. Now coming to the update regarding our markets. So on the weekly expiry date, the benchmark index Nifty traded in an extremely narrow range of just 97 points, which was the lowest daily range since the last 20 trading sessions. Also, it has formed a small body candle with a minor shadow, which shows a lack of commitment from both the bulls and the bears. Today, taking into consideration the positive gap up opening on account of the positive sentiment seen in the global markets, the zone of 24,300 24,350 will act as the immediate hurdle for the index. Any sustainable move above the levels of 24,350 will lead to a sharp upside rally towards the mark of 24,500 in the short term. On the downside, if we see the zone of the 50-day EMA, that is the levels of 24,050, 24,000 will act as the immediate support for the index. Any sustainable move below the psychological mark of 24,000 could lead to further selling pressure towards the mark of 23,850. Coming to the derivative data, so we had the August futures which ended on a flat note, but if you see the open interest of all the three combined series, it has dipped by about 3.23%. Looking at the option chain data, that is from the weekly expiry perspective, 24,200 has significant call open interest followed by 24,500 strike, and on the put side we have 24,100 which has substantial open interest followed by 24,000 strike. Coming to the update regarding Bank Nifty, so Bank Nifty has also traded in a narrow range of just 300 points on Wednesday. It ended near the lower trend line of the bearish flag pattern. Most noteworthy, it has given a close below its 50-day EMA level. Further, the daily RSI is currently in the bearish trajectory. Going ahead, considering the gap up opening, the zone of 50,100, 50,200 will act as the immediate hurdle for the index. Any sustainable move above the levels of 50,200 will lead to an extension of the pullback rally up to the levels of 50,600 in the short term. While on the downside, the zone of 49,600, 49,500 will act as the immediate support for the index as the lower trend line of the bearish flag pattern is placed in that region. Any sustainable move below the levels of 49,500 will lead to further selling pressure in the index. In that case, the zone of 48,900 will act as the immediate support zone. Coming to the option chain data for Bank Nifty, so we have 50,000 strike which has significant call open interest followed by 50,500, and on the put side 49,500 has substantial open interest followed by 49,000 strike. Coming to the key market indicators, so the volatility index India VIX ended at 15.43 with a cut of 4.4%. However, since the last 4 trading sessions, it's oscillating in the zone of 13.39 and 16.6. Going ahead, the zone of 16.8 would be the crucial levels. Above 16.8, we could see an upside towards 18.6 levels. Coming to the advanced decline ratio, so for the third consecutive trading session, the advanced decline ratio was largely tilted in favor of the declining counters. Coming to the key sectors in focus, so we have on Wednesday, Nifty IT strongly outperformed the frontline indices and ended above its 20-day EMA level. The daily RSI has given a bullish crossover, hence we recommend to look for stock specific opportunities in the IT space. Coming to Nifty Pharma and Nifty Healthcare, they are also witnessing positive traction from quite a long period. These are sectors which have been outperforming in the market. But in trade on Wednesday, this particular sector witnessed a bit of profit booking. Uh, coming to the uh, Coming to the main sectors which are slightly underperforming, so Nifty Metal, Nifty PSU Bank, Nifty Realty are likely to underperform in the short term. Further, Nifty Bank, Nifty Private Bank, and Nifty Financial Services are on the verge of giving a consolidation breakdown on the daily charts. Hence, we recommend to avoid these sectors for the next couple of trading sessions until a strong reversal is observed in these sectors. Coming to the FII data, FIIs in the cash market, that is sold to the tune of 2,595 crores, while DIIs purchased to the tune of 2,236 crores. That's a wrap of today's edition of the podcast. Thank you for regularly tuning in and listening to the podcast. Wishing you all a happy and energetic trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.